Most beginners never make money in Forex because they overcomplicate things.
If you want to start trading Forex, this is the first and the only video you need to get started with. I've removed all the unnecessary stuff you have been learning from other videos and kept this super simple. Now, some people tell you that, oh, you need to spend 3 months on a demo account, learn all these technical terms, study complicated charts before placing your first trade. I am here to debunk that. You can literally start trading today. Think of it like driving a car. You don't need to know how the engine works or how the engineer puts everything together. You just need to know how to steer, accelerate, and brake, and maybe, of course, know when to put fuel. It is the same thing with Forex. You don't need to start stressing over pips, lot size, leverage, and all of that math. We have calculators for that. If I need to multiply 1537 times 625, I don't need to sit down to do the mental gymnastic. I just punch it into my calculator and the answer is there. It is the same thing with Forex. You see, when I started trading, I wasted so much time on things that I actually don't need to be profitable. And that is why I started this channel, to cut the crap, get you to the real deal, and help you to start trading fast. So if you're new in Forex, this is what you need to know to take your first trade. One is what is Forex, followed by the currency pairs you need to focus on. 3, the tools you need and how to set them up. 4, a simple strategy that works. And 5, a support group to help you stay consistent. And I'm going to teach you all this in this video. So let's get started with the basics. What is Forex? Forex stands for foreign exchange. Anytime you exchange one currency for another, you have participated in Forex. For example, if I use Naira to buy dollar at the Bureau de Change or pay a Google subscription in dollars, I have engaged in Forex. But Forex trading is different. In professional Forex trading, we don't physically buy currencies. We are making bets on whether a currency will go up or go down. For example, if I trade Euro USD and I buy, I am betting that Euro will rise against the dollar. If I sell, I am betting that Euro will fall against the dollar. Let me show you what I mean. So this is TradingView. It is a platform where we analyze the market. It is one of the tools you will need to start trading. To create an account with TradingView is really simple. Simply use the link in the description, click on Get Started and register. After that, come to Product here, click on Super Charts. It opens up and you then come here and search for Euro USD. And this is it. It shows you the Euro USD chart. Now, my own chart is a little different because I've done some customization. If you want me to make a video on how to do this, just let me know in the comment section. Again, this is Euro US dollars. And let's say I believe the price is going to go down because I've conducted my analysis. So what I'll do is that I'm going to come here and pick this tool. Short position means that I want to sell. I'll click on it and I will place it here, put my stop loss here, and I want my take profit to be 2R. I will explain what this means. So you can see risk to reward ratio 2R. And from here, over here, the one in red at this section is my stop loss. The middle that is in gray is where I want to enter this trade, and the green is where my take profit I want it to be. So if I allow this trade to play out, so the trade has gone my way and I have made profits. Now, since this is 2R, if I am risking $100, it means that if this trade doesn't go my way but went and hit my stop loss, I will lose that $100. But if this trade goes my way and hits my take profits, just as in this example, I will have made $200. That is my $100 that I'm risking trade plus additional $200. This is how the trade is done. But the question is, how do we know that the price is going to go up or go down? There are two ways: fundamental analysis and technical analysis. Fundamental analysis are basically economic events, policies, and news. So for example, if the Eurozone economy is fairly stable and Trump goes ahead to make policies that end up weakening the US economy, the dollar will start falling against euro. So I'll be looking to buy this particular pair, Euro USD. If the reverse is the case, I'll be looking for a sell position for the same pair. In technical analysis, on the other hand, we forecast price movement based on what it has done in the past by studying historical price actions. And something to note when trading technical analysis is that it is important to take into account economic events and possibly avoid trading on these days. For example, on forexfactory.com, these are the news in red on the currency pair you are trading. So when there's a news in red on the currency pair you're trading, you possibly avoid trading that currency pair that particular day, or you trade after the news has taken place. Now, I'll come back to show you a strategy that you can start using to trade today. But let's go back to our table of content and follow it. We have discussed the basic knowledge of Forex. Now, let's discuss the currency pair you should trade. You see, the Forex market is a $7 trillion a day market. In other words, the volume of transactions taking place daily in Forex is about $7 trillion each day. About 75% of this trade volume occurs in the major currency pair. The major currencies are the currencies of the world's biggest economy, including the USA, Eurozone, Japan, United Kingdom, Canada, Australia, New Zealand, and Switzerland. So, major currency pairs are these currency pairs that I've listed paired against the US dollar. Most of the volume in these major currencies occurs in the first three pairs. So we have the Euro USD. This is the most traded and has the best liquidity. Then GBP USD, high volatility, good for quick trade. Then USD JPY, it is stable and reliable. You don't need to trade anything else. Just focus on this as a beginner. Now, what tools do you need and how do you set them up? I have mentioned TradingView for charting. You also need a broker. This is where you deposit money for trading and then withdraw the profits you make. Then you need MT4. This is where you place the trades. And finally, you will need a Forex calculator. This helps you to calculate your lot size. So in the example I gave earlier, where I mentioned risking $100, I will not be entering $100 into the MT4. What I will enter is the lot size. The calculator calculates what lot size my $100 is in relation to my stop loss. So the math is done for you here. You don't even know what it is. Now, the process to take trades is this. I will start with the broker. I'll create an account and fund it. Then I will connect my broker to the MT4 or MT5. Then I'll go to TradingView, conduct analysis and generate my trade signals, then calculate the loss size using the calculator. Then on the MT4, I then place my trades. I have made a practical video on this process. So click the card here to watch or find it in the description of this video when you are done watching this one. Also in the description is the broker that I recommend. They will help you with the deposit process and other things you can do with your account. Now, the strategy. This is quite simple. What we need on TradingView is this. We need to include this indicator. This is called the MACD. So I'm going to click on indicator here, then type MACD. So moving average, convergence, divergence. I'm going to click on it. When I click on it, this will appear here. Then the next thing I'm going to do is to zoom into the chart. I am on the 15 minutes time frame. This is 15 minutes. You can use any time frame you want. So what you have to do next is to come to this section where you have different charts. If you haven't set this up, you won't see 1, 2, 3. You just see one of them and this drop down arrow. I'm going to click on it and I want to select the line chart. Now, if you want it to appear here, you just put a star. You just like click the star beside it to have it permanently shown on your chart. Then now what I need to do is this. I'm going to pick points. Looking at this chart this way, I have it in line mode. So the point I'm looking for is, I'm looking at where this point meets. So this point aligns with this point. It somehow also aligns with this point. This is what I mean. If I come here, this is called a trend line, and I click on it and I pick it up and I draw a trend line this way. The idea is to capture these lines. So even if I capture only these two when they formed and I drag it all the way down, you see, I only need to capture these first two, this one and this one, and drag it all the way down. What you will notice is that this one respected it, and even this recent one respected it. Once I've done this, I'm going to come back to this place and change it back to candle stick charts. So the next thing I'll be looking for is to take a short position, because it's a trend line and the price is going down. It means that the market is down trending. So what I should be looking to take is short positions at this trend line. And to confirm that, I would choose to take a trade in two conditions, either using the Heikin-Ashi, which is what I was teaching in another video, or using this MACD line. When the MACD line crosses, like for example, if this chart is here and it's a trend line, I'm looking for a cross. So when this cross occurs around here. So what I need to do is to pick my tool, shorts, then I'm going to enter here, put my stop loss at the top here, and drag my take profit till it gives me 2R. So you can see if I entered here, I'm going to make my profit and I'm done. The same thing occurred here. So the trend line is being respected and this crosses here. So the same thing, I'm going to come here, go take a short position around here, put it here, and this is my 2R. This isn't hit here, but this is another opportunity. If I take this here, this is where it crossed, and I enter here, for example, and this is my 2R. So you can see this one has finally hit here, and this one has actually hit. Just following this simple strategy, draw your trend line, take trades. If the MACD crosses in the direction the trend line is predicted. Now this is going to continue until the trend change. It will continue until the trend change. When this trend changes, it will start going up, and I will draw a trend line going up and try to catch trades in that particular direction. So if I was risking $100, I will have made 200 here, made 200 here, make another 200 here. So at the end of these three trades, I have made a total of $600 from this trade. So you can see this is quite simple. Now let's end this video with the support group. These are some mistakes to avoid as a beginner. If you don't, it is going to cost you. Number one, stay disciplined. You will have some losing trades. Let me say it again. You will have a lot of losing trades. But the thing is that you can still be profitable even if your winning rate is only 50%. You can still be profitable even if you only win 50% of the time. That is why risk management is very important once you have a strategy. Risk management is 70% of trading. It is really, really important. Don't risk more than 2% of your account size in each trade. As a beginner, don't do this. Always set your stop loss and you will take profits. You will know how to do that when you watch the video after this one. 3, you need to be consistent. Consistency is what will make you a pro. You need to be consistent. And 4, a support group is also important. You can get trade ideas, signals, live classes, and Q&A from there. So anything you don't understand, you can ask in a support group. One of the best one out there is the one that I just started. So use the Telegram link in the description to join. And now, in the comment section, let me know what video you would like me to make next to clear your understanding of Forex. And of course, you should be subscribed and turn that bell icon on so you don't miss that video.